All right.
Good afternoon,
Thank
everyone.
you.
I'm Charles Payne. This is Making Money. All right, so today's session, right? We were bracing for this for a long time because we know, well, it's a bad month, right? In fact, so far, this is the worst session since August 1st. Now, think about it. The same sort of scenario played into that. Seasonality, everyone was anxious. The last 3 days of July were sloping down, and August 1st crashed much lower. We're getting something like that today. Of course, today's session also began with an added feature, and that was headlines, the most expensive market in history. Wow, this is really scary stuff. But is it really, right? I mean, there are some expensive stocks, and I'll use air quotes for that, right? And they're leading the charge, but look at this, folks. I mean, so this is your range here this year for these names. NVIDIA up to 39% forward PE, Microsoft 33%. Obviously, Tesla, the big one, at 200 times. But if you take them out, Mag 7, 16 to 20, that's about really where markets normally trade. Still, you have fearmongers, bears, all assorted curmudgeons are zeroing in on September 3rd because in 1929 and 2008, those are your respective market tops that preceded major crashes. And this brings up something I consider, many actually, not me, but some consider this the worst stock tip in history. Let's go back. Early October 1929, Yale economist, at the time perhaps the most famous economist in the world, Irving Fisher, stated, quote, stock prices have reached what looks like a permanently high plateau. Well, that was early October. October 24th, the market was down 11%. 4 days later, down 13%. Then there was Black Tuesday, down 12%. But I got to tell you something. This is interesting. There's a 2003 study going back to 1929 using more modern tools, and they discovered that Irving Fisher was right in the sense that the market back then was not overvalued. Look at all the different sort of indices that you had. Then you had the S&P 50 industrials, the S&P 90 composite, whatever it was, nowhere near what people would consider an expensive market. So that leads us to the question, why did the stock market crash in 1929? And is it vulnerable to that extent at this very moment?